Artificial intelligence is kind of secretly rewiring our entire world, from how we look up stuff to how we make art. But one of the biggest and maybe quietest transformations is happening right in your wallet. So today, we're going to dig into how AI is changing the way we invest and ask a really big question. When it's your money on the line, who do you actually trust? And the answer might actually surprise you. Because whether you're a pro trader or you're just dipping your toes in, there's a really good chance an AI is already nudging your financial decisions in ways you probably don't even see. So, according to a recent report from the Ontario Securities Commission, AI is popping up in three major ways. First up, it's a decision support tool, giving you recommendations and insights. Second, there's full-on automation, where algorithms are just running entire portfolios by themselves. And third, well, there's the darker side. AI is also making financial scams way, way more sophisticated than ever before. And all of this leads us to the real heart of the matter, this big battle for our trust. With these incredible new tools, who are we supposed to listen to? A human expert? A super smart AI? Or something else entirely? Well, a pretty fascinating experiment decided to find out. Researchers from the OSIC and the Behavioral Insights team basically asked this exact question to over 7,000 Canadians. They set up a simulation where people had to decide what to do with a hypothetical 20 grand. They wanted to see whose advice people would actually follow when it felt like real money was at stake. All right, so let's meet the contenders. In one corner, you've got Alex, your classic human financial advisor. And in the other corner, we have Kai, a cutting-edge AI tool that's built to just chew through massive amounts of data and spit out the perfect strategy. And here's Kai. Now, what's so cool about this is that the researchers actually gave the AI a persona. They didn't want it to be some faceless, abstract algorithm. They wanted to see how people would react to an AI with a name and even a face, making it a real head-to-head competitor with Alex, the human. But hold on, they didn't just stop there. They threw in a curveball, a third option. This was a blended team, where the human advisor, Alex, actually gets to use the AI tool, Kai, to help shape their advice. This is kind of a sneak peek at what the future of this whole industry might look like. So, the moment of truth, who won? Well, it turns out the blended team had a little bit of an edge. When you look at the data, investors strayed the least from the advice they got from that human-AI partnership. Now, the researchers are careful to say the difference wasn't a total knockout punch, statistically speaking, but it's a really interesting clue about where our trust is naturally leaning. But here's the real headline here. Yeah, the blended team did well, but the bigger story is that people were surprisingly okay with Kai, the pure AI advisor. There wasn't this massive fear or distrust. People followed its advice almost as much as the humans. So the whole feared robot takeover of finance, it might be more of a welcome partnership. Okay, but this is where the study takes a really surprising turn. They uncovered something else, a twist that had less to do with AI versus humans and everything to do with a hidden bias that was lurking inside the investors themselves. 20%. Just let that number sit there for a second. What do you think that is? A fee, a commission, a hot stock tip? Nope, it's a habit. That's right. The researchers found that no matter who gave the advice, Alex, Kai, or the team, and no matter what that advice was, the average person just parked about 20% of their $20,000 in cash that wasn't earning a dime of interest. This was such a big deal that the researchers called it out directly in their report. This cash bias shows that even when you have expert advice right in front of you, our own gut feelings can just take over. And that can really hurt our long-term returns. It's a huge reminder that sometimes the biggest risk to our investments is us. So this whole discovery of our own biases opens up a really cool idea. What if the next generation of AI advisors wasn't just built to understand the stock market? What if it was built to understand us and our weird little psychological quirks? Well, that's exactly what some new research is digging into. Now, this diagram might look a little complicated, but it's basically a blueprint for a brand new kind of AI advisor. It's a model for an AI that goes way beyond those simple risk questionnaires to build a really deep, dynamic profile of you, the investor. So how does this thing actually work? Well, it's pretty brilliant. First, you just have a normal conversation with the AI, like you're talking to a person. Next, the AI's risk profiling module analyzes not just what you say, but how you say it to figure out your real comfort level with risk. And finally, the strategy optimizer takes that unique profile and builds a portfolio that is custom-made just for you. Honestly, the easiest way to think about it is like your Spotify Discover Weekly or your Netflix recommendations. It doesn't just give you a generic playlist, it learns you, your tastes, your moods to find the perfect thing. This new AI model wants to do the exact same thing, but for your financial DNA. Okay, so this all sounds amazing on paper, right? But does it actually work? Well, the researchers ran a simulation to find out. They put this new personalized AI model up against two other common strategies, a traditional one and another more standard AI portfolio manager. And wow, the results are pretty jaw-dropping. The personalized AI model, the LPPR, didn't just win, it blew the others out of the water. Just look at that annualized return, over 14.5%. According to the paper, that's a 73% improvement over the old school model. And get this, it wasn't just about making more money, it was safer too. It had the smallest dip during market downturns. Okay, so let's pull all of this together. We've been on quite a journey, right? We started by testing the advisors we have today, we stumbled upon our own weird biases, and now we're getting a peek at a future with hyper-personalized AI. So on one hand, we've seen we're actually pretty open to AI in our financial lives, especially when a human is in the loop. But on the other hand, we also saw a huge blind spot, our own psychology, like that 20% cash habit. That can make us ignore even the best advice. And that is exactly why this next generation of AI is such a potential game changer. It represents a huge shift. We're moving from AIs that just understand markets to AIs that can actually understand people. They're being designed not just to give advice, but to give the right advice for the right person in a way they'll actually listen to. Which leaves us with one last, really big question for you to think about. As this tech gets better and better, you might have to decide, would you hand over your life savings to an AI if you knew it understood your hopes, your fears, and all your little biases, maybe even better than any person ever could? The future of your money might just depend on it.